just because it's a great idea doesn't mean it's going to make money. And it applies here also. Just because it's an
Oh,
amazing
yeah.
concept doesn't mean that everybody's going to want to invest.
Hello, everyone, and welcome to another episode of Test, Optimize, and Scale. It's an honor to have Seth Farbman with us here today, co-founder and chairman of V-Stock Transfer. We're going to be talking about public companies, private companies, filings around capital raises. Seth is one of the authorities, the thought leaders in the space, and I've been personally looking forward to the discussion. Seth, thanks for taking the time to hop on the podcast.
My pleasure. And Jason, you're putting a lot of pressure with an intro like that. Undeserved, but I'm always happy to talk shop with you. So it's a pleasure to be here.
Well, I had a blast on the panel with you at the Regulation A conference in June 2024. I know we've crossed paths at Roth, the Microcap conference, and some of the groups, some of the events for the public space. So glad we're able to continue the discussion, educate audiences to an extent, or at least share some of the notes of what we see on capital raises across the board. And yeah, I thought we could begin with your background, your history, and your path leading into V-Stock Transfer.
Absolutely. And yeah, it was a pleasure sitting on the most recent panel with you. I've got to tell you, just before we jump in, one of the things I was so impressed with in terms of your discussion and the nuggets of gold that you dropped there is your ability to have so many different statistics on the tip of your tongue. Like, I think a lot of us talk about like general concepts and, but you were like piercing through it with data. So we'll circle back to that, but I just want to say that was great.
Appreciate
The
that.
journey, yeah, sure. No, I mean, the journey on my side is sort of like all over the place. I started as a securities attorney, if I want to date myself, I guess back in like 2000. And by 2002, I was working out of my basement, had my own legal practice. And then, right place, right time, a lot of hard work, started Vintage Filings, which was an SEC Edgar filing firm. And, great story. Slept on my couch for like 9 months. Had pizza, breakfast, lunch, and dinner because we had to give the appearance that we were 24/7. And yeah, my partner and I, Shai Stern, we did that for about 5 years, which felt like 30, and then we had the good fortune to have an exit. We sold the company. At that point, we'd grown out of my basement. We had about 100 employees, and we sold the company to PR Newswire, and it was a great test. A taste of what could happen. It was also a test of my sanity, but it was a taste of what could happen. I've tried a couple other things which failed miserably in the weight loss space after that, and the clothing space, and just decided to stay within my four walls of corporate compliance. So, since then, which led to the roads that we cross is. Had a company called V Corp, which did incorporations, which we sold to Walters Clore. V Check, which was background and due diligence, we sold to a private equity firm. And then for the last 12 years now, really focused on growing V-Stock Transfer. We work with about 900 issuers, primarily pre-IPO and IPO. And then as a side product, I work with a company called Share Media, where we do LinkedIn marketing also for those public companies. But I think where we overlap the most is just working with these companies as a transfer agent, but really all they want to do is talk about how can they raise money. I mean, if we call a spade, that's the objective of all these CEOs, and that's where we are today.
I'm in a lot of similar conversations in the sense that I could talk about advertising, I could talk about metrics, those numbers, and that's why I have the stats ready. The only measure is with numbers. And if we're only talking about the return on ad spend that agencies, my firm, whomever is able to produce, it could set the wrong expectations. So I like to give out the averages, like to talk about the benchmarks on each stage of the algorithm that we're looking to hit. And likewise, they just want to know what's their cost of capital, How can they bring on funds? They're not interested in the advertising impressions and clicks as a generalization, but I explain,
Right.
there's
Right.
nothing behind the curtains. This is how it's produced. And by having alignment in the benchmarks that we're going after, we're going to be able to produce a lot more. So you have groups coming to you and saying, hey, I've seen what you've done over the years with your exits, with vintage filings, with V Corp, V Check. I understand you're an expert in the space. You've done this for 900 groups. How do we submit everything compliantly to be able to raise capital and or go public?
Yeah, I mean, and to your point, when these CEOs approach us for insights or direction, you know, I think everybody's looking just for that, flip the switch, raise the
Sure.
money, call it a day.
Oh, yeah.
And I think you would agree, there is no one holy grail, right? I mean, we live in a
Correct.
world now where maybe 10 years ago, when companies were going public, doing an IPO, raising capital, it was really about, put an ad in a magazine, put out a press release, hope somebody reads it, and sit back and collect the money. But in today's day and age, it's a multi-pronged approach. You need the social, you need the digital, you need the road shows, you need all these different variables, and still have the time to actually run your business as a business, which is not easy. But most of the time, the companies that we speak to at VStock, specifically for the stock transfer services, they come to us maybe anywhere from a month to 9 months before they go public. And now that there are so many different ways to go public, right? Whether it was the hot thing, the SPACs, then it was a four-letter word. Now I think it's going to be super hot again. That's coming back with a vengeance. Um, the Reg A route, the direct listing route. At the end of the day, the companies are digesting what is going to be the best way for me to raise capital, whether it's 75 million from one underwriter, or $1,000 from a heck of a lot of mom and pops. And I think that's the question that these companies are weighing when deciding whether to go public or not, and which route to pursue.
And how do you direct them? How do you paint a picture of which route is better? The single investor underwriter, 75 million, or the $1,000 checks, 75,000 of them, whatever it
Yeah.
may look like to
Yeah.
hit
I
those
say
big
run for the
numbers.
hills. Either option. No, I mean, there are pros and cons to both.
Sure.
So like, I can only give your listeners, like, from real world examples. So we have one issuer that ended up going public through Reg A, and I think they had 22,000 individual mom and pops. And that has its own set of challenges, right? Because
Yeah.
the companies direct all these shareholders to us as a transfer agent, and our phone is blowing up. And it's not the investor's fault. They're not When you go that route, they're not really that educated. So it could be the call from the guy that's sitting in his pajamas and invested $50 or $500 and say, hey, sell my stock. And we have to explain to them, there's a whole capital markets out there. There's a broker dealer, there's a clearing firm, there's a transfer agent, there's a investment banker. We don't sell stock for you. And we have to have that conversation 20,000 times over with each small investor. So that has its challenges, but it gives you a great opportunity for retail, right? You want that aftermarket support and liquidity. Um,
Oh, yeah.
Again, versus other companies that want to just do a direct listing. They may have access to capital, and they're like, I don't really need an investment banker. I don't have to pay those fees. I'll bring my own resources. I'll do a direct listing. Well, those have some challenges with the aftermarket trading. And then you've got the traditional routes. And for us as a service provider, our goal is really to, I guess it's twofold. One is to service the company, the CEO and management team, and then also to service the shareholder and just be responsive. Which route they end up going, doesn't have too much of an impact on the role that we play.
And what's the difference? The differentiating factors of the process, if it's 1 month or 9 months leading into that launch.
Yeah, I mean, so I think it's going to depend on not just the unknown, but and this might be frustrating for a lot of the companies out there. It's what's beyond your control, right? Because there are times when the auditors have delays for all types of reasons. There are times. Listen, there was recently an auditor who had some issues, and that affected hundreds of publicly traded companies and their S1 filing. And there's nothing you can do about that. It's beyond your control, and numbers go stale. And it also depends on the comments that you get back from the SEC. Are they quick fixes, or is it something that really is going to take some time to dig into? So the time process, whether it's the audit, the registration statement, dealing with FINRA, dealing with NASDAQ, trying to decide which exchange you want to go on, New York Stock Exchange, NASDAQ. For a time, there was an option to go on SIBO or the OTC market. So all of these play into the fact that I think what's most important, Jason, for your audience is that it's not an overnight success, right? Everybody sees us ringing the bell and the confetti and the champagne. It's like, oh, I'm going to do that. Can I get in there next Tuesday? It's like, no, you've got to start planting. We're in July now. You've got to start planting seeds today, for that big moment 6 months or 8 months from now.
Sure. 9-month overnight success.
Yeah,
Not even
exactly.
speaking to the
Exactly.
company goals and milestones before that. What are commonalities in the groups that have the most successful public offerings? They IPO, their trajectory from there is positive. What do you see? What can you recommend for founders, for groups that are considering going down this path or already are, involved in that journey?
That's actually a great question. I should put together a thesis on that someday,
Yeah.
and I'm sure you have your own opinions. But frankly, what I think is the common ingredient is the recognition that you need to market, and I think you can probably attest to that as well. There are companies out there that, to their credit, they believe in their company, whether it's lithium batteries, electric vehicles, biotech, pharma. They believe that their company is so awesome that once that first day of trading starts, they are going to just have shareholders and funds and analysts come out of the woodwork asking to participate in that journey. And that is so rarely the case. It's the CEOs and the companies that recognize that we need to become storytellers. We need to become a media company. We need to put aside the budget to do the social, to do the digital, to invest going to conferences like the ones that you and I attend, to develop relationships with panelists and with attendees and funds and analysts. And it's the companies that recognize that uphill battle that I think will do better, because they're getting the exposure, and that's going to help with the liquidity, and that's going to attract the capital, and it's one thing feeds into the other.
Mm-hmm. Mm-hmm. That's why I choose to focus on the marketing side, front line of performance. I hear, different answers from different groups and different sides of the table. And I respect that. And I'm always looking to learn and provide, insights to founders, to CEOs, whether it's what we work on or, outside of that. I couldn't agree with you more. I love how you said, media source, media publisher. I'll see groups just interested in direct response, transactional type marketing, and that's great. And we talked about some traffic numbers on the panel and how you need a whole lot of visitors, relatively speaking, to produce enough investments, to produce enough movement, to be able to hit the next stages, but to be able to have those storytelling abilities and showcase constant momentum, traction, and create that sensation of, hey, this is a moving ship. This is my opportunity as a shareholder, or an analyst, a fund, whatever it may be, to participate and hit that destination, with the organization. You got to demonstrate that through the actual content that's being distributed, and of course, have enough eyeballs around it.
And I'm curious. I mean, it's your podcast. You're doing the questions, but
No,
I am
conversation.
curious. No,
Yeah.
I am curious. Just in terms of what you do with the digital marketing, do you find that the industry makes a difference? Meaning, if it's a biotech and a pharma, are they less inclined to sort of have that excitement from an audience, as opposed to if it was some sort of like, exotic race car or something that's more tangible, more noticeable. Is there a difference in the digital side depending on what the product or the company is?
Sure. Well, first of all, it's a lot easier for us to track on the private side of things. And when we're talking about public as a marketing agency, we see correlations. We can't, say or point at anything that we caused. And we encourage CEO branding. We encourage those updates, and for content for, let's say, some of the Regulation A plus campaigns that we work on. And you mentioned, hey, this is a path forward. It's something that companies that are going public talk to you about. It's a full spectrum of different industries. We started with a solar company and their Regulation A plus campaign on Start Engine. Have one that moved from test waters to a live campaign this week,
Oh,
and
wow.
did 7 figures overnight.
See, they
From the
have
reservation
overnight
holders.
success. We don't,
Yes.
but they do.
Well, but it was to your point, over 6 months of marketing to get reservations
Okay, good.
to
I'm glad
be
I
able
clarified
to.
that. Right,
And I
exactly.
believe they'll pass, multiple 7 figures today. So that's exciting to watch. A lot of the Regulation A plus campaigns are now using tech platforms, Dealmaker, Dalmore, T zero issuance. There's North Capital's whole list of groups in
Sure.
that ecosystem, of course, and they're then responsible for all of the traffic, bringing all of the investors there. I've definitely met the founders who think they're going to put up a page, and like you said, analysts, funds, shareholders are just going to come out of the woodwork, and you have to explain. Even if that occurs, it's better to project conservatively and make sure you have a baseline level of traffic and then scale into that. We've seen, including Regulation CF, everything from tunnel boring companies. Group I was talking about, it's data compaction,
Mhm.
influencer AI platforms. But we've also seen, I said tunnel boring, but as they say, boring businesses do very well. Community
Okay.
businesses do very well, and shareholders who want to be part of the experience, they want to support. Entertainment's a category that can produce, especially around the right messages, the right morals, the right storylines getting out there. So I get asked that quite a bit of hey, what industry does this work for? It only works for flying cars, right? And we do work with a flying car company, but it's really more around social proof.
Okay.
The social dynamics are at play here, and that crowd effect comes from it. I should come up with more analogies, but one that I make a lot is the empty restaurant sensation versus the line around the block, and how important that is for crowd sales, investment
Okay.
crowdfunding campaigns. And it could be an amazing product, but with no movement, no traction, it feels like that empty restaurant. Of the menu looks good, the venue looks nice, but something feels off. I don't know what it is. Maybe, there's something about this place that I don't understand. Meanwhile, you see the place across the street with the line around the block. You don't even know what they serve, but maybe
Right.
telling
That's a
yourself or
great
your
example.
wife, your
Yeah.
partner, hey, I want to go there. This looks good. I want to check that out. All these people can't be waiting in line for nothing.
The
Some of
fear of
them,
missing out. Yeah.
yeah.
Oh, that's great. That's a good analogy.
And the top 10%, and I went over some of these stats on the panel, the top 10% of issuers, whether we're talking about Regulation A, Regulation CF, tend to get all of the investors. The bottom 50%, 50, are very stagnant. I get a lot more data on the marketing from the private campaigns, as I mentioned. So that's why I keep referencing back to these. But I can tell more of what's occurring, more of the story. So to answer your question, I'm almost more interested in the audience size and how many people can participate, how many people can post, than the actual product, the actual business itself. Which
Mhm.
I hate to say, I'm a product guy, but
Right.
it's true. I've seen amazing pieces of technology with no eyeballs around them, and I've seen relatively, let's say, common businesses do extremely well with the right press, the right endorsements, the right media, the right volume, flood of investors coming in during the early stages of the round.
And even though you reference all these private companies, but your client base is a public company as well, right? I mean, if they want to do a secondary, that's up your alley, correct?
Absolutely. Absolutely. I think there can even be misconceptions that, hey, once the company's public, they've made it and they're on, the markets
No,
and they're just
I
going
can
to
vouch that that is not the case. Yeah,
they're just going to
yeah,
attract their own investors and everyone's going to love what they're doing. When
right,
if I'm, in-house at their offices, I'm telling them, hey, we got to be doing regular content, press releases. How are we stimulating new relationships with media in our industry, with media that speaks to retail, that watches the market? Are we doing a monthly webinar to talk about all of our new updates? Do we have an email ecosystem and distribution system going? What are we doing on social media? How do we actually communicate that we're moving, we're growing, everything has to be compliant and go by legal, but there's this concept of the marketing funnel, starting broad with awareness and moving to consideration, intent, conversion. Let's say it's investment, repeat conversion. We'll see retail investors participate multiple times, quite a bit, have some numbers around
mhm,
that. And then advocacy, peer-to-peer marketing. That's what you're really playing for with the content. So why wouldn't, a public company that has, a focus on how their stocks doing,
right.
volume, price, again, compliantly. Why wouldn't they want to get meaningful updates out to the audience, and then have that audience grow in an ongoing
Absolutely.
fashion, and
No,
even
that's good to know.
look to see prospective investors join into that as well too. So again, where they go to invest, how you're tracking it, how you can find correlations between your updates and other metrics you may be measuring. A little different of a story and easier to do on the private side, but I definitely would encourage the fundamentals for marketing of a public company.
All right, that's good to know. Good to
Hmm.
know.
Hmm. And you know, I I see too many companies that, as I mentioned, going public or the Form A or Form 1A or Form C, they get there and think it's all going to move. I think it's great that you're talking about storytelling, becoming a media publisher, saying the same things there. You are a LinkedIn expert, as you were mentioning with
Yeah,
with
I don't
your
know. I don't know if expert or enthusiast or addict, take your choice. Hey, listen, the truth is that for me, it was less about the data and more about just the forum or the platform, because the alternative is, I guess, cold calling and pitching and trying to push your services and going to 30, 40 conferences a year, as opposed to really having the chance to leverage the platform and get in front of the right audience. I mean, you do a great job of it. You've got the podcast that repurposes for content. You've got the panels that you sit on. And I just think that even today, and you find this funny, even today, I was talking to a CEO earlier this week, and I mentioned LinkedIn in passing, and he's like, "Oh, isn't that the site for resumes? I'm not looking to hire anybody." And I get it. I mean, that's how LinkedIn
That's
came out of the
hilarious.
gate so long ago. But today, it is such a gift, not just for content, but also just to do research on others, whether it's others in your industry, other partnerships, other professionals. What's the latest? Like, I go there for sort of my daily update of pulse on the market. And I don't think people realize the authenticity and the value of authenticity. It's funny. I always tell the story. I had this client, and I said, John, why don't you just like post about what's going on in the company, some updates? He's like, no, it's boring. Nobody cares about what I'm doing. I said, John, let's just take a step back. I said, what's on the agenda next week? He's like, I got a board meeting. I'm like, okay, where's the board meeting? He's like, well, one of my board members has like a villa in the Swiss Alps, so we're all meeting up there. I was like, you don't think that it would be an awesome picture if you could take a picture at your board meeting in the Swiss Alps and your shareholders would appreciate that. It's like, oh yeah, I guess I see what you're saying. And then like they don't see that. And then it's funny because 2 weeks later I said, Jonah, I didn't see any posts from you. And he's like, oh yeah, I forgot to post. I'm like, they're just not trained that way.
Sure.
You have a certain, set of eyes when it comes to marketing and what's going to work and what's not going to work. And I have a certain set in terms of like, how to position. If you're a CEO, biotech, pharma, whatever it is, you just may not have become accustomed to seeing things in that light. So that's one of the things that I and you, and I think that people need to work on.
Absolutely. I mean, it's all in the follow up, right? Whether you're inviting friends over for a barbecue or, selling anything, it's going to be multiple touch points in that a conversion, uh, a sale, or whatever you want to call it, occurs. And what happens between that first offering and when the audience actually moves forward matters. A lot of the times, I'll find investors like to do their due diligence. Go figure. And
Understandable. Okay.
even retail, and I think retail gets a bad rap. They want to search around, they want to see what's occurring, and if they get to a CEO's LinkedIn or a brand's LinkedIn and there's nothing, it says something. And if they're looking at another investment
It's true.
opportunity
It's true.
and they're seeing posts about a board meeting in the Swiss Alps and a conference the next week and a podcast the week
Yeah.
after that, maybe a new partnership, maybe a product, evolution that's occurring, a new client, it gives off this sensation of, wow, that this business is doing things, and far more so than the individual, the group that's doing nothing. So I
Yeah,
think
you hit it
is a
right on the head.
must.
And it sounds oversimplified, and it really is. I mean, it's not rocket science to say, hey, just put some effort or investment or time into your LinkedIn profile. Even more so on the individual side than on the corporate side. But like the simplicity of it, that we live probably now more so than 10 years ago, we live in a very visual world where people
Yes.
don't have the attention span to like really spend time reading. So what's going to capture their attention on LinkedIn, whether it's on the profile or whether a press release or the visual that's going to capture their attention on a digital ad that you're putting out there, it's all about that pop. And like you've got to stop the scrolling, right? And so what we do, what you do, I'd like to think it stops the scrolling, says, hey, wake up, read what's going on here, like you said, as opposed to the next guy who's got a generic gray banner and it's a picture of him and four people as his profile. And I don't even know which one is him because there's four people and a dog drinking a beer. That kind of simple stuff makes a difference.
Sure. I think I know who you're talking about, by the way. But no,
I wasn't going to call anybody out, but no,
I
there's a lot of them out there.
I think LinkedIn is underrated. I personally have put together some of our largest strategic partnerships through simple LinkedIn outreach. Groups that have sent us dozens, in some cases more, of clients over the years, and I could track back to the first message I sent them.
Funny. That's
So,
great.
invitations you can send, 25 per day. You could get a bit
Right.
above that on any LinkedIn account. And, if you're seeing a 20% or higher acceptance rate, sure, it's still a bit of a numbers game, but you could be building relationships. Again, you want to look at compliance, but with job title investors or the exact
Yep.
individual you're looking to reach at the exact company. You could have it geo-targeted down to the zip code or, wherever you're going after. A small radius. Proximity has a power to it. And you could then message your contacts. And if you're seeing a 20% or higher response rate to your messages, you're in a good place. I mean, hey, that's 25 invitations a day, 5 new contacts a day,
Totally.
1 new conversation, maybe 1 new book call a day, 500 for the month invitations going out, 100 new contacts. That definitely adds up. 20
Yeah.
new
Yeah.
meetings out of it, perhaps. And beyond the outreach, which I'm very bullish on for LinkedIn. You can set up your LinkedIn page, connect your email addresses to it, or your email server. You used to be able to upload email lists. There's
Yeah.
still
They
some
don't let you do that
around
anymore.
it.
It kind of bums me out. I like that, but
Yeah, it
but
made
you're
it a
you're
lot
you're right.
easier.
you're right
Yeah.
in terms of like the specific targeting, and I don't think enough people recognize that. Like there are some companies that we work with where they may have just raised 30, 40 million. They're not in it necessarily for the money, but connect me to every neurosurgeon in the country. Well, that's
Yeah.
an awesome way to get in front of a targeted audience. Or we had a guy that was doing vasectomy work and his product, and he said, connect me to every urologist in the country. So
Yeah.
that's better than going to 30 urology, conferences. You just sit at home and blow up the Rolodex, which is it's an asset. It's
Mhm.
yours. The same thing with your email lists and the people that you're targeting. You're growing an asset that belongs to the issuer, and there's value in how to do that.
Absolutely. And I think most leaders, if not all leaders, should be doing it. Whether they're doing it themselves and hey, I'm going to block out half an hour each day and find the exact people that I want to connect with and build these large relationships with, or whether you're having an assistant. I know people who use virtual assistants, next to nothing in terms of cost to do this. There are automation tools, although I would recommend doing it yourself or training someone internally first so that you can really customize the messaging and
Right.
not just have
Right.
the same generic template going out to everybody. Although that's better than nothing, it's powerful stuff. And then once you build up your LinkedIn page, you have your LinkedIn company page, you could be inviting people to the company page. There's a limit they give you per month. Everyone at the company can be doing that. You could be messaging
Yep.
your audience regularly. You could create a group. You could create, all different types of content publishing tools. They'll prioritize you on LinkedIn if you're using LinkedIn Publishing, LinkedIn Live, at any of these different platforms that they have to connect people, especially if you're early in testing them out. I even like their organic and their outreach tools more than some of their advertising tools. Their advertising, it's a lower click-through rate, a higher cost per click than many channels. You are pulling people from the news feed. I like the in-mail, but people know it's paid for, it's sponsored, or
Right.
it's using a credit. But it's kind of cool. You set up a retargeting pixel on your site, somebody visits your site. That day, they have an in-mail message from you. It shows a sophistication, and yeah, I like what you're doing at Share Media a lot. Love that you're
Yeah.
constantly at the top of my LinkedIn feeds. By the way, with your own posts, it's there.
You can block me. You can
Underrated.
block me.
No,
No, I
not at all.
appreciate it. I
Not at all.
appreciate it.
Well, with everything that you've seen, what would you recommend for founders who are listening in to test out towards their own capital raise? I look at, marketing and the marketing of a capital raise to hit the full goal as a series of tests. What tactics,
Sure.
what approaches would you encourage them to use towards their own model?
Well, from my perspective, which is somewhat limited, when we're brought into the picture, one thing which is just an easy fix is that when they're raising money, um, you know, they have to act as if, right? They can't just, sort of, we'll try it out, we'll see. I mean, they can try it out, but they have to present themselves as if they're the real deal. And one of the ways to do that is not printing stock certs out of your basement or sending emails that say, "Oh, you now own," like, be legitimate. Like for $100 a month, whether it's me, somebody else, get a transfer agent, and that
Hmm.
shows your investors that you're serious, you're real, you're compliant. You can still choose whether or not you want to keep those shares in electronic format or send out a physical certificate. Believe it or not, we probably send out shy of 100 packages a day through FedEx. Some people still want to give their investors that look and touch and feel of the paper cert, but either way, like act as if, show them that they've got nothing to worry about if they invest in you. And the other thing is just to network. Just there's so many different ways that you can um, find people that are interested in your story, whether it's, I would even say radio, TV, the different agencies. There's an opportunity to go deep, and I think very often people will try one way, and you may have experienced this. They'll try one type of ad, and they're like, "Oh, it's not working. Forget it." Like, it's you gotta try out different things, see which messaging works. You can have one, banner or post that gets 200 views, and you sort of repurpose it a different way, and you'll have 25,000 views. So I think that they just have to keep trying new things until they come across something that works. Those are kind of the things that I would focus on.
And if they're not finding anything that works and it's been a few weeks, a few months, or perhaps they are, but they want to cut out the fat, polish, and really do more of what's working, identifying those pockets of performance, perhaps. But I like the scenario of it's not working yet. What are the best approaches towards optimization? I think the industry focuses so much on success that so the question's overlooked at times.
My first answer then would be call Jason. My second answer, my second answer would be, listen, if at some point it's really not working, then you have to look inside, right? You have to understand, is it the market? Is the timing off? Did biotech take a bad hit over the last 6 months? And I would have a totally different response if I sucked it up for another year and then went public then, or did a capital raise then. Am I going about the process with the wrong team, right? I mean, I think you and I have both been around long enough to know that half of the challenge out there is knowing who not to do business with. And sometimes you just have to change things up a little bit. And I'm hopeful that everybody will get to the right place. And if you don't, then listen. I've had companies that I've had to shut down. It's just like, just because here's the mantra that I live by. Just because it's a great idea doesn't mean it's going to make money. And it applies here also. Just because it's an amazing
Oh, yeah.
concept doesn't mean that everybody's going to want to invest. So you gotta really explore.
And any tips, any examples towards scale? Maybe some of the top groups you've worked with over time?
I think interaction with your shareholders is key. I
Yes.
feel like so many times the companies at the IPO level or public companies, they don't know who their shareholders are, right? I mean, they'll order a NOBO list and it's got a couple thousand people on it. They've got an address, they've got a name, or sometimes what's referred to as street name. So they know they've got shareholders out there, but they don't know who their audience is. And I think that there are tools out there that will allow people to better communicate with their shareholders. I think that companies that are raising money through agencies like yours are ahead of the game, because if they've raised money through this process, you've got all the data, right? You've got all the email addresses, you've got who the targets are, and how to reach out to them and communicate. So I think communication with shareholders is something that's not done often enough.
I come across that as well. We'll work with groups on Reg CFs, Regulation A plus campaigns. Fourth round we have live with one client right now. Finished a sixth round with another client, and they're in good shape. But there's other issuers that in between rounds provide no communications and have all types of great things to talk about. I like
Right.
even just
Right.
the what you're doing and showing board meetings can go a long way.
Sure.
So Seth, this is great. I am in these conversations all day. Again, more on the private side. We have public clients as well, but I'm taking note. I'm always looking to learn more, and your expertise really shows here. So I
I
want to thank
appreciate it.
you for
Likewise.
taking the time to hop on the podcast.
Thank you very much. Always a pleasure. And I will see you probably at the next conference in September.
Where can they go to learn more? And any parting thoughts you want to leave them with?
Sure. Well, I'm always accessible. Email Seth@vstocktransfer.com. You can track me down on LinkedIn, that's for sure. And I think I just invite anybody to speak to me about any topic. Whether it's startups, whether it's raising capital, whether it's storytelling, whether it's LinkedIn. I'm very much like you, is that I enjoy speaking to everybody, because you never know what's going to come from it.
Absolutely. And definitely encourage the audience to do so. Take Seth up on that invitation. Seth, thanks again. This has been great.
Likewise. Thanks again.
Thanks, everyone. Take care.